we have a markets overview with John Sackton. And before we get into the presentation and the Q&A, I want to thank our sponsor for this particular component of our webinar series, Connor Brothers Cloverleaf. Thank you very much for your support. We also have our sponsors for the entire webinar series and like to thank them as well. Just some quick housekeeping. Please keep yourself on mute. You don't need to have your camera on if you want to save bandwidth for the audio. And we'll be showing John's presentation in just a minute. For those of you in the industry that you will know John very well. He's been around the industry for several decades, and he has worked in all of the areas of the industry, from fisheries management, trade associations, magazines, and even running his own seafood import business. And he started writing seafood industry news back in 1977. He was founder of seafoodnews.com and has now transitioned away from that a little bit and done a little bit more freelance material. And he has been a long-standing presenter at our annual in-person conference. So glad to have John do this for us in an online virtual session because nothing about 2020 has been normal. And like so many organizations, we've had to pivot to online content. So again, thank you for being here. John, if you'd like to maybe just say a quick hello.
Yeah, I'm looking forward to this presentation. It was recorded a week or two ago, and I hope we can have some questions and answers to deal with evolving market situation.
Thank you, John. And as John just said, we're going to show his presentation. It is a lengthy one and full of data and insights. So it'll take just over an hour. It'll be followed by a live Q&A session with John. So please stay with us throughout the whole presentation. Write your questions in the Zoom chat and please include your name and organization. And we will review those and ask John those questions during the Q&A. We'll try and get to as many questions as possible. And the slides for John's presentation will be made available to you, the participants, following the session. So now we can move to the presentation.
Good afternoon. This is John Sackton from Seafood Datasearch, and we're talking this afternoon about the state of the seafood industry looking to 2021. As many of you know, I've been giving this presentation at the Fishery Council of Canada for something like the last 10 to 15 years. In terms of my background, for those of you who are new to this presentation, I've had over 40 years in the seafood industry. I've been a crab, shrimp, lobster market analyst since 1997. I've done price and market outlooks for Atlantic Canada, Alaska, the U.S. West Coast for many years. I was the price arbitrator for the Alaskan crab fishery from 2005 to 2018. I've done work, of course, on mussels and oysters. I was a co-founder of National Fishery Institute's Global Seafood Market Conference, and of course I prepare this annual review for the Fishery Council of Canada. And my business is Seafood.com News and Seafood Datasearch as well, although I'm now retired as editor of Seafood News. So let's get into our talk today. Last year at the Fishery Council, what we were primarily talking about was trade war and the disruption that the U.S. trade war with China has caused for the seafood industry. This year, of course, we're talking about the coronavirus. In fact, Canada's seafood industry has been very resilient in the face of COVID-19. One of the reasons has been the diversification of markets for lobster. That's been a key driver. But as we're going to see in this talk, the U.S. remains by far the largest seafood buyer for products out of Canada. And right now, the U.S. is kind of on a knife edge with the potential for lower purchases from Canada or the potential to have kind of a normal holiday season and Lent sale season this winter. We know that we've seen major changes in food service and retail sales, and we're going to be talking about that. And then, of course, the second part of this market review is to talk about specific species such as lobster, snow crab, salmon, coldwater shrimp, and others. So let's think back to this spring. It was March. Everything was shutting down. We did not realize what was coming at us with this virus, and there was real fears as to whether there would even be seasons in the crab and the lobster fishery. We were first of all afraid that plants would not be able to operate, that there wouldn't be any safe way to do so. There was some concern that vessels would not be able to fish, but all of that was resolved. There were issues, and particularly in Quebec, about virus breakouts in particular seafood plants, but with the exception of a few 1 or 2 week closures, plant safety protocols largely worked and plants were able to start operating. Same thing with vessels. The vessel safety protocols and the ability to unload your product safely all worked, and the vessels were able to operate as well. We did have some delays both with crab and lobster. The biggest impact turned out to be the ban on foreign workers coming into New Brunswick. And this meant that many of the major processors, particularly in the lobster industry, were operating with less than half of the workers that they normally depend on in the season. And this definitely impacted capacity. The other thing that happened in the spring was we had to react to the food service shutdown, which was dramatic, and we had to react to changes in wholesale and consumer demand for retail seafood. And finally, the impact of the support programs was very critical. In April, the United States put in what was called the PPP program, Paycheck Protection Program, and it turned out that this federal income support in the second quarter was actually quite important in maintaining the level of seafood purchases that happened. So, to summarize, this spring Canada managed to complete both the spring crab and lobster seasons. Very important. Seafood turned out to be one of the foods that was most missed with various restaurant shutdowns. U.S. seafood suppliers received directly over $1 billion in financial support from the government, which helped a lot of them to continue operating. And seafood demand actually led to some price spikes and shortages for particular items. So when we fast forward to where we are in October, we are in a lot better position in the seafood industry as a whole than we initially thought we might be when we think about last spring. Lobster and crab, of course, are the two most financially significant fisheries in Canada, and both of them had real growth in 2019. I don't think you can see my mouse on the screen, but those two blue bars represent lobster and crab sales in 2019, and you see how much we had growth. And the green bars represent the year-to-date comparison between 2019 and 2020. So you can see that through July, which is where our trade statistics are at the moment, we're definitely seeing lower value of exports in lobster and lower value of exports in crab than we saw in 2019. And that is largely due to the fact that prices for these commodities came down significantly. Now, if we look at shrimp and salmon, which are the other two items on the right, and you look at the last two bars comparing first 7 months of 2020 to 2019, you'll see that the value has been relatively constant. So what our takeaway from this is that although we had a very good year of lobster and crab growth in 2019, the lower prices in 2020 have reduced the overall value significantly. So now we're saying we want to talk about Canada in relation to the U.S. market. Canada is still heavily tied to the U.S. market. For the last several years at the Fisheries Council, I have been talking about this favorable trend of Canada being more diverse in terms of its seafood markets. And you can see on the top line of this graph that the market share of Canadian exports going to the United States declined from about 63% in 2016 to 59% in 2019. That's a very healthy trend, and we want to see that continuing. But in the first half of 2020, of course, it reversed substantially. So, for example, in 2020, the U.S. is taking about 65% of all Canadian seafood exports, in China, which is the next line, which is the next largest market, is taking 23%. Their share has definitely come down. Now, part of this is timing because China had the experience of the virus first, but it also has other factors that we're going to go into. When we look at the U.S. market in particular and the major Canadian products, we can see right away that the U.S. market is by far the dominant buyer for snow crab. China comes in a very distant second, and Japan. With frozen lobster, again, the U.S. is by far the dominant market. If we look at live lobster, you can see that these are quarterly exports, by the way. But you'll see in terms of quarterly exports for certain quarters, particularly the third and fourth quarter of the year, China is taking as much or more lobster than the United States on the live side. If you look at fresh salmon, the farm salmon market, this is almost exclusively a U.S. market. If we go to the next slide and we look at cold water shrimp, we can see that the shell-on offshore cold water shrimp market heavily goes to China, also to Iceland and Denmark. It's not really a factor in the U.S. Whereas the cooked and peeled market both goes to the U.S. and to the U.K. and somewhat less so to Denmark. Now, the importance of China and the Canadian situation is critical because China is the first major country to recover economically from the pandemic. The graph on the right here shows the year-over-year change in retail sales and private investment. And what you see in the green line there is that as of August, retail sales in China actually nudged ahead of where they were in August of 2019. And the investment is following that same pattern. And in fact, the Purchasing Manager Index, which is a survey that's done monthly in China, came out 60% higher this last month than the consensus forecast. It was at 51.5 instead of a forecast of 50. What this means is that anything over 50 is seen as positive economic purchasing, and anything below 50 is showing a contraction. So right now it appears, especially with the resurgence of the coronavirus in Europe, that China is the only major industrial economy that's expected to post actual GDP growth this year. So for that reason, the fact that China is Canada's second most important market is very favorable. This is a good time to have strong trading relationships with China. But the problem is that outside of a few products like live lobster, some Dungeness crab from the West Coast, shell-on cold water shrimp, a few specialty items that go to China for processing, most of the other Canadian seafood production is primarily tied to the U.S., a little bit to Japan, and then some to Europe and the other Asia. So the U.S. remains overwhelmingly dominant by volume, and that's really going to impact our outlook for the rest of the year. Let's just zero in on where where Canada has a market advantage in China. What this chart shows is the total Chinese imports of a product in green and the percentage or the volume of that product that comes from Canada in purple. And so you can see that on live lobster, Canada actually represents about 72% of the total Chinese market right now. The U.S. takes the remainder. Frozen lobster, it represents about 100% of the market. There's no U.S. exports of frozen lobster to China. On cold water shrimp, this is imported Pandalis shrimp. Canada represents about 45% of the total Chinese market. If we get into live crab like Dungeness, it's less, it's 15%. If we get into something like a fishery like hake, Atlantic fishery, it's 55%. So you can see that the major Canadian exports to China are in fact dominating in many of the markets, or very significant in many of the markets where they take place. So this is a very strong position to be in. So the questions we really want to address today after this kind of brief intro is the impact of COVID-19 different than other seafood supply impacts in the last 10 years? If so, what's the difference? Are some markets for specific species reacting differently than others? And what dynamic is going to drive sales, and what do we expect for the seafood industry in 2021? We're going to spend the next segment trying to answer these questions. The first point is that the pandemic has hit different sectors very unevenly. We know that food service and restaurant shutdown has been among the biggest areas affected by the health reactions to the pandemic, along with things like air travel, cruise ships, and international tourism. And this is important because in the seafood industry, about 70% of U.S. seafood dollar sales go to food service. So this shutdown of the food service sector, particularly the near 100% closures in April and May, and since then the only partial reopenings, they've had a huge impact. But it was not as much of an impact as we all feared. It was mitigated initially. And so now that we're 7 months into this pandemic, these next few months are going to be critical in determining whether that mitigation has been successful in bridging us to a healthier state, or if we're going to see significant long-term damage. So if we look at U.S. restaurant performance, the U.S. remains one of the worst countries in terms of response to COVID. It's in the same range as Brazil, as Russia, as Mexico. It's not at all in the same situation as countries like Germany or Canada. And you can see this in statistic after statistic. So this is a measure of restaurant trends from Open Table, comparing countries by the number of seated diners. And again, this is the percentage over a relationship to the prior year for a given week or a given Friday night. And what you can see is that Germany, in the last 6 weeks, has basically been consistently ahead of where they were a year ago, meaning that their food service sector is actually recovering. If you look at Canada, Canada has gone from approximately 40% below where they were a year ago to close to 20% less than where they were a year ago. It is a recovery. If 80% of your food service sector is open and working, that's definitely an environment you can work with. The U.S., by contrast, is the worst performer here and has gone from a 60% negative year-over-year comparison to about a 40% year-over-year negative comparison. And the problem is that since September, this tendency has tended to reverse itself. Things are not getting better, they're getting worse in terms of U.S. Restaurant performance. The real important thing to remember is that seafood distribution is not out of the woods. Recently, Kim Gorton, who is the CEO of Slade Gorton, a major national distributor, a big buyer of Canadian seafood, testified before a House hearing. And she said that the seafood distribution industry to food service is facing about $2.2 billion in uncollectible bad debt. This is what restaurants had purchased for use or for sale in April and May and June that they could not sell because they were not open, and therefore they didn't pay their suppliers. They didn't have the revenue to pay their suppliers for what they bought. And so here's how that is an issue that's sort of facing the industry. Kim was lobbying Congress for a bailout, for this to be part of the next federal relief package, that they would companies be able to apply federal relief to pay off this uncollected debt. She herself says that Slade Gorton has lost about 70% of their business. The reason this is a problem is because the lending by banks, which is sometimes called factoring, is pretty much key to how seafood moves through the system. Initially, the banks will lend money to a distributor like Slade Gorton, who then goes out and, let's say, buys $500,000 or $1 million worth of snow crab. They bring it into their warehouse, and then they start selling it out to their customers. They give a 30 to 60-day term on that purchase. So their customers then sell the snow crab, use the revenue to pay back Slade Gorton, who now has their inventory paid, and then Slade Gorton can in turn recapitalize their bank loan or recycle the revolving line of credit. Well, what happens when the restaurants don't pay? And this is happening with Cisco, for example, major distributor. Cisco cannot pay their suppliers. So that freezes up the system. So the Slade Gorton now has this big outstanding supplier debt that's owed to them. So they can't go back to their bank and recycle their line of credit. And if they can't go back to their bank and recycle the same line of credit, they're not going to be able to purchase as much in the holidays or in the winter as they would be able to purchase under a normal situation. So there's very much a hope that there will be some sort of federal relief package that will allow companies to use part of that money to pay or accommodate these bad debts, in which case we'll have a much more normal holiday season. What happened in this spring and summer, however, was that the industry got a reprieve from retail seafood. If we look here, seafood was the leading product, the leading protein product in terms of changing in consumer purchasing through retail stores when the restaurants got shut down. And if you can look at this graph, this is week by week from the middle of June to the end of August. And seafood spiked up to 170% of its normal volume at retail. And it's trended down, but even at the end of August, it was running at least 20% ahead from year-over-year purchases, and was doing far better than the red meat and pork sector, was doing far better than deli meat. So what we saw going on here was that consumers made a move into retail in a big way, and that one of the big winners of that was it became a go-to place for them to get their seafood. Another thing that was very positive for consumers, for seafood industry, was that the frozen category was very, very strong at retail. In addition to seafood by itself, the frozen category was up 20 to 30% year over year, far more than what you've seen with general foods or refrigerated dairy categories. So as people switch their food usage pattern to more at-home, more retail-based food usage, both seafood as a category and frozen food as a component of their purchases rose at a very, very good level, very strong level. So this is very positive for helping seafood consumption. We recently did, last month, in September, we did a survey. It's not a scientific survey, but we did a survey over some large number of employees at Urner Barry, some other people in the seafood industry across quite a range of economic circumstances, to just see what we could see in terms of people's changing behavior of seafood consumption during the pandemic. And this is what the survey showed as responses, which tended to confirm some of these trends that we've been seeing in the national data. First off, we saw a big increase in seafood consumption. If we look at the number of people who increased their seafood consumption during the pandemic while they were at home, 40%, 38% said they increased their consumption, 49% said it was about the same, and only around 13% said it decreased at all. We also saw a big increase in the use of frozen food, and we also saw a continued emphasis on healthful cooking during the pandemic. All these trends are extremely helpful for seafood. Our survey also showed the strength of retail. One of the things that we wanted to examine was whether seafood distributors were able to make a switch from selling to chefs and restaurants directly to home consumers. A lot of them tried to do so. We did not find much evidence in the survey that that was very successful. What we found instead was that we saw a big increase in the number of people who are purchasing more seafood at retail stores. That's the bars on the left. We also saw a big increase in the number of people who are getting seafood from friends and family and personal use. This is because part of our survey was, of course, in the seafood industry. In the middle there, the big decrease, of course, is eating in restaurants. But the other place that we saw a significant change in behavior was buying seafood from a food delivery service like Instacart or Amazon Prime or HelloFresh, which actually take seafood available at retail and deliver it to your door. And we found that people increased their use of this channel as a way to obtain seafood while they were at home. On the last chart on the far right, where we thought about buying online for home delivery or picking up, did not really exhibit much change in behavior. I found that a little bit surprising. The other things we want to talk about in terms of the U.S. is that small business revenue makes up about 45% of the GDP in the U.S. This has not recovered. We're also looking at restaurant traffic is kind of stalling somewhat as the summer ends. You saw, this is again the U.S. and Canada. Both countries are experiencing a downturn in September as there's sort of more reports in virus spiking, like some restaurants have had to close again in Toronto, for example. And consumer spending growth is stalled out. The stimulus program was really effective. It was effective in the industry, and it was effective in consumers and in maintaining personal income. And what happened was that in the second quarter, from April to June, personal income in the U.S. actually increased year over year because despite the shutdowns and the layoffs, the distribution of money directly to American citizens and the addition of a $600 a week unemployment benefit, which was very widely spread, all served to protect disposable income. The key is that that has not continued. The gridlock or the failure of Republicans in Washington to agree to a new stimulus is now potentially leading us into a difficult situation where personal income is now falling and consumer spending has stalled. So when we look about the next year, what we see is first, the beginning of this recovery boosted optimism for seafood distributors. But with the recovery now stalled, there's the risk that much of this temporary loss of restaurant and food service business might become permanent. The changes that we've seen in seafood buying patterns that have sent snow crab to record prices, for example, have been helped by maintaining income levels. This is now at risk. So in my view, the U.S. economy is kind of on a knife edge with a real serious risk of big disruptions this winter. Consumer confidence in spending is not going to rebound, whether it rebounds or contracts is going to be partly based on the election results. And many of the analysts, for example, Moody's and others, say very specifically that if Joe Biden wins the election, there's going to be a much better economic prognosis for the country than there is if he doesn't, because of Biden's commitment to large-scale stimulus programs as has been proposed in the U.S. House of Representatives. The economists would produce that, or suggesting that if these stimulus programs are enacted, the average household real after-tax income would go up by approximately $4,800 over the 4 years. This would lead to very continued positive seafood consumption numbers. So we are not out of the woods. When you look at the strong price data from something like snow crab or lobster, it suggests a normal recovery and that everybody's demanding seafood. But that huge debt burden that we talked about in terms of Slade Gorton and others could derail purchasing this Christmas and this Lent season if it is not addressed. If these distributors have to eat all this bad debt, a lot more of them are going to shrink. They won't be able to buy as much. It would be diminishing the pipeline through which seafood gets out to consumers. I've gone through the summer recovery and the August personal income has fallen. So without new stimulus, we're looking at a very bleak outlook in the fall and winter. So far, about 25% of U.S. restaurants are expected to close permanently, but that number could grow if the economy goes south. So now let's get back to Canadian seafood. I've talked about the diversification, how that remains key. We've talked about it for live lobster. I want to talk next about China's demand for live lobster and how that is key for lobster pricing, even in the U.S. If you look at this chart, you can see the the green line there is the percentage of Canadian shipments, live shipments, going to China in any given month. And you can see that in some months it's as high as 70%. What we've seen is that the price of lobsters to China, of live lobsters to China, is much more stable than the price in the U.S. And that dotted purple line is the average trend line of the pricing on the left side of the graph, pricing to China. The green dotted line is the pricing to the U.S. And what we see here is that during periods where most of the lobster goes to China, the following months we see higher prices in the U.S. because a larger portion of the lobsters have moved out into the market. This may have some seasonal factors as well, but I do feel that in general, the high volume sales to China actually benefit in two ways. First of all, they get Canadian lobsters to China, but secondly, they keep U.S. pricing a lot higher than it would have been without this shipment to China. The rest of the graph here, and I just want to make a side point here, Fishery Council will definitely distribute this presentation to its members, and you will have a chance to look at these graphs in more detail. But in this particular case, Korea, France, Spain, other important destinations for lobster are much smaller in terms of volume than Canada and the U.S. But this recovery in smaller markets will also help seafood exporters. Recoveries in Europe, recoveries in Japan and Korea help on the margin. And even though they're not seen in the big numbers, having a few customers who are taking more lobsters in Korea, taking more lobsters in France, is going to help the overall pricing and situation this winter. Salmon and crab are much more concentrated in the U.S. market, and so they have a very different dynamic in terms of price volatility. On salmon, including both whole fish and fillets and frozen fillets, 99% of Canadian exports go to the U.S. market. This pandemic is likely to increase Canadian dependence on the U.S. market in the short term. One of the reasons is that exports depend on air capacity, and the travel issues and the shutdown of a lot of international travel has distorted trade flows. So the blue line there is passenger or convertible wide-body service. The red line is freighters. And what you can see is that there's been a move to freighters and freight utilization once the passenger shipments have declined so much. Now the problem here is that there is a lot of cargo traffic between North America and Asia. The Asian cargo routes have largely recovered because of the e-commerce boom in the U.S., because so much products are still flowing to the U.S. from China. There's a lot of air capacity, so the ability to ship Canadian seafood to Asia is actually very, very good. But the ability to ship to Europe is much more constrained because there's a lot less air capacity, cargo air capacity right now between North America and Europe. And so when we come to this December, and we normally have holiday markets for things like lobster in Spain and France and Italy and places like that, we might be constrained by freight problems, and that's going to strengthen Canadian dependence on the U.S. market. Now we're going to turn to our species review. And for those of you who are not in the business, this might be a little more technical, but we want to look at the recent pricing and price history and supply situation for lobster, snow crab, shrimp, salmon, and some other species that are exported from Canada. So let's start out with lobster. What we've seen in live lobster pricing was very low prices in May and June. We were afraid that the markets for live lobster were not there. There was less capacity. It wasn't clear that the reduction in capacity, the delay of the season in the Gulf was going to match up with the customers, and we weren't clear about China. But what we found is that since June, live lobster prices have indeed come up. There has been more of a balance in the market, and we're actually back now to what we have to consider normal pricing. This in September, we're very close to the live prices that we also saw in 2019. Now, the problem is that, well, before I go into some of the reasons for that, let me just show frozen lobster. What we see here, the red graph there is the price of frozen lobster tail as a typical 4-ounce tail. And you can see how much it was coming down prior to the pandemic. Lobster tail had already gotten quite expensive. Customers were already backing away. Processors were very nervous about their inventory, so they were hesitant to buy lobster for processing. And the price came down, and then it bottomed out. And why it bottomed out was because at the new price levels, there was more interest on the part of the existing food service customers to start dealing with more frozen lobster. The other black light on this graph is the live pricing, and you can see every year that the bottom out of the live price is always in June, and normally there's an uptick after that, and this year has been no exception. Now, what's behind this rise in price? It's not entirely that everybody is demanding lobster. Yes, it's demanding lobster, but in fact, our supplies are down. Even before the pandemic, in Canada, the landings and the LFAs were trending down, although not by much. In Maine, which is the blue bars on the graph on the left, the decline has been more serious. And this continued this summer as Maine has opened up. So if we look at the volume of American lobster imports from Canada in April, May, and June, you can see it was down significantly from prior years, from last year. And in the summer, since the Maine fisheries opened, we've seen widespread reports of lower landings in Maine. So the price recovery that we've seen in lobster has not just been because everybody's over the pandemic and everybody's scarfing down lobsters. It's been because there have been real shortages of supply. And that shortage of supply is now out of balance. And that's what's pushing the price up. It's also shown that we've had strong demand for frozen lobster. It's increased Canadian lobster purchases from the U.S. If we look at this, these are U.S. lobster exports. The exports to Canada are lobsters that are used for processing. The exports to China are lobsters that go into the regular Chinese live market. So if you look at the Canadian graph, the first 3 bars there, you'll see a big change in year-to-date exports, live exports from the U.S. to Canada into July. The reason for this is because the processors in New Brunswick, without the foreign labor, they did not get the volume of lobsters they needed for processing during the regular season, partly because of caution about where the prices would go, partly because of lack of labor. A lot of the foreign workers did manage to get into the plants by July, and as a result, with good pricing, the processors have been playing catch up. So you can see how much more they've been importing into Canada from the U.S. We've also seen an uptick of lobster exports from the U.S. to China. That's, I think, more market driven. So before we leave lobster and go to snow crab, I think that's we're just going to summarize this here. Lobster and crab are mostly eaten in restaurants. compared to shrimp and salmon. So this is, again, data from our informal survey, and we asked what species they ate in the restaurants and what species they ate at home. And you can see that for shrimp and salmon, restaurant and home consumption is very similar. Same thing for whitefish like cod and haddock. But when we look at crab and when we look at lobster, the self-reporting here is a lot of that goes into restaurants. A lot less of that is done at home. So we also put that together with the fact that crab and lobster had the biggest retail sales gains. So there's clearly been some shift from eating crab and lobster in restaurants to eating it at home, but not exclusively. I think that one of the things that's happened with the live lobster buying is that the tourism on the East Coast supported outdoor dining, and the types of summer restaurant service where it's easy to eat outdoors, where you're often in these locations where you're ordering seafood like lobster, had actually supported a lot of the normal food service demand or tourist demand for lobster. What we found was that because in the US people were not able to do international travel, there was much more tourism, much stronger tourism than expected in Maine and New England and the mid-Atlantic along the coast. And this type of tourism definitely supports purchases of crab and lobster. So I think that was definitely a factor that involved the use of live lobster. So currently on lobster, live prices are currently higher than processors are comfortable with. So at this point, you can't really buy more lobster for processing. At the same time, processors are reluctant to raise their own pricing, but the shortage and demand is pushing some prices higher. So lobster tails have gone up from around $17.50 maybe to $18.50. They're kind of creeping up. No one expects and nobody wants them to get back to the $22 or $23 level, but customers are resisting that. But there is some pressure now, upward pressure on prices. These trends, the lack of supply, the strong prices, the competition for lobster, could really support strong holiday sales, particularly if export markets like China and Europe kick in and they're healthier than the US. So what we're really looking at for the fall is the LFA 34 season opening up the last week in November. And that's a live season. And it could be, if the landings are heavy, it looks like the market's going to take them. If the landings are light, or if there's bad weather and a shortage of fishing days, prices are going to get very high and very volatile. Let's look at snow crab. Snow crab is at an historically high price. I've talked in the past about how it's in this new trading band. That's because snow crab has become an amazingly popular product in the US. This year, snow crab started out pricing about 20% below the prior year, but once the season opened and once retail started selling snow crab, prices shot up, as you can see in this chart, where we see our pricing since May, going right back up to where it was last year, in some cases higher. Now, it's a very important point. If you're a harvester and you look at this chart, you're going to say, I was screwed. How come I didn't get a higher price first few weeks of the season when I was landing my crab? But when I look at this chart, I see a total success story, because our situation at the start of the season was everybody was nervous. The buyers were nervous. The banks were nervous. Nobody knew what was actually going to happen. And if we had started out with too high a price to open up the season, we could have caused a freeze up. And a freeze up, if it started, would have been disastrous, because then nobody would have wanted to take the risk to get involved because they didn't have any confidence as to where the price was going to go. But what happened was this was an example of setting the price at a level that encouraged market players to get in and buy crab. And I talked to distributors here in the U.S. who were very, very nervous on their first load or second load of crab. They were very nervous that they weren't going to be able to sell it, that they were going to take a risk, they're going to be stuck buying an expensive item in the middle of a pandemic. And the price that it was at was good enough for them to say, let's give it a try. And the wholesale price that flowed from that was good enough that our customers said, okay, let's take it and let's give it a try. And the rest there is history. In other words, we have a big success story because snow crab was priced correctly at the initial start of the season this year, given all our uncertainties. The retail performance of the crab category has been very, very strong. I just want to point out that what's happening in snow crab is that volume is going up even as prices are going up. And this is a sign of a very strong demand for a product. And in this chart here, I don't have my pointer, but if you look at the crab line, you'll see that the percent of pounds sold at retail in 2019 went up 3.3%, and the average price went up 6.3%. So that's really significant. That shows you that pounds are up, volume is up, and pricing is up. It shows that you have a very healthy demand for that product. Now, if you look at lobster, which is the next line down, you had an 8% decrease in price, and an 8% decrease in volume, and a 7% increase in price. That's more typical. If you look at salmon, you had a 6% increase in volume, but only a 1% increase in price. So crab is really an outlier here in terms of the strength of its performance at retail. If we look at food service, crab is distributed by national chains. It's distributed in mid-scale restaurants. It's distributed in fine dining. One of the things, of course, we're impacted by the number of restaurants that are closed. But because snow crab is sold at mid-scale restaurants, we're still getting a pass-through of snow crab into these restaurants, which is different than a product like fresh halibut, which is primarily sold at high-end restaurants. So I also wanted to point out the change in snow crab usage. The Japanese market is important. It's very important for snow crab producers, but overall, Japan is a lot less of a factor in the snow crab market than they used to be. On the bottom right, you see the usage of snow crab in Japan compared to the usage of snow crab in the U.S., which is the green. So the U.S. has surpassed Japan, and what's happened is as the prices has risen for snow crab, the U.S. has been taking more and more volume, while the Japanese volumes have contracted as the product has gotten more expensive. So it's clearly become a very well-established product in the U.S. I don't think this trend is going to change. This is just another chart of the current pricing of snow crab. Right now, a lot of people, there's just no inventory. A lot of people think the market is oversold. There's heavy bidding on Russian imported snow crab. When I say the market is oversold, is that there's some people who've likely made customer commitments to crab that they do not have. And so they're out scouring every foreign source they can find to try to get more. That's what's leading to the bidding on the Russian product. As again I said, the U.S. snow crab supply increased in 2019 along with pricing. It's a sign of very strong demand. We've seen so far this year a surge in imports of snow crab from Canada and Russia. So we expect that in 2020, the volumes of crab are going to increase again, due to the strong price. It's pulling crab from everywhere. So our outlook here for snow crab is extremely strong. We don't see any chance for a change in pricing until the new season in the spring. And at that point, the adjustment will depend on what the U.S. economic situation is. And the Japanese usage will follow the U.S. pricing. They won't set the market. Just one word about Alaska. There is a domestic snow crab fishery in Alaska that's very important. It does compete with Canadian snow crab. This year, due to the pandemic, NOAA was unable to conduct their summer crab survey. And so one of the results is that most people are expecting that the crab quotas in Alaska will be similar to last year and will not show any increase. So we should expect about the same volume of Alaskan crab, 37 million pounds or so, as we saw last year. We're not expecting an increase from Alaska. Let's turn to salmon. Salmon pricing has been very volatile. Salmon volumes at retail have been extremely strong, but they've been impacted by transportation problems due to the pandemic, both in Chile and in Norway. Canadian whole fish, the Canadian salmon industry, for those of you who might be unfamiliar with this, produces both whole fish and fillets. Whole fish is by far the majority of what Canadians produce, and a lot of that whole fish goes into the food service market because the chefs like to buy and cut and handle the salmon themselves, whereas the retailers tend to buy more pre-cut salmon fillets and put them out on their sales case pre-cut. So the Canadian whole fish exports have suffered some lower prices due to the lack of food service demand. But at the same time, the overall Canadian market share has increased because Norway and the UK, the other primary sellers of whole fish, have not been able to get their products into the US. So this price chart, the red line is this is the Urnerberry Farm salmon pricing. The red line is the salmon prices this year, and you can see that we came down to a low point in May. Then we've had two price spikes. We had a price spike in July, we've had another price spike in September. Both of those price spikes have been caused by transportation issues. What's happened is that there was a trucker strike in Chile, and that's the latest disruption. That's what's caused a price spike in September. And there was a shortage of air capacity from Europe, which led to the price spike in July. So now I'm on this next slide here where Canadian whole fish has gained market share from Norway and the UK due to these transportation issues. We can see that through the first 7 months, in July 2019, Canada represented about 54% of whole fish in the U.S. market, whereas this year they represent 60%. So the Canadian market share is higher. But whole fish pricing has declined more than fillet pricing, again because the retail has been stronger than food service, and whole fish is more sensitive to food service. So the Canadians are selling more whole fish, but they're selling them also at a lower value. And you can see in terms of absolute volumes, we're not talking market share, but just absolute volume, there's been a lot less fish that's been imported year to date compared to prior years. So the outlook for salmon is that our fresh whole fish, which is used in food service, is still under somewhat price pressure. I mentioned the trucker strike in Chile that pushed markets up. Northeast whole fish is trading above its 3-year average. That's the Urnerberry term for Atlantic Canadian salmon. And air cargo space continues to be a problem for European shippers. European imports of salmon are now the lowest they've been since 2016 to the U.S. So it looks like, if you look at the chart on our Northeast Atlantic whole fish, even though it's been below the average for most of the year, it's looking like now it's getting back into a more normal, more consistent price range. We're also at the time of year when salmon prices tend to rise going into the fall and winter, and there's no reason not to expect that to happen. If we look at cold water shrimp has been impacted by the pandemic. Prices have come down. This is the UK price and the Danish price in local currencies, both of them. You can see both charts show a lower price. These are monthly prices for this year. If we look at the next slide where we go to U.S. pricing, we see that U.S. prices are down also. The Pandalis Jordani fishery on the west coast of the U.S., the shore prices are averaging around 50 cents a pound. The Canadian summer shore price was determined by the Newfoundland Fish Price Panel to be $1.08 Canadian. The Canadian shrimp tend to run larger, but both of these prices are well below where they were a year ago. So cold water shrimp has been hit by the lack of food service sales. Remember, a lot of double frozen shrimp in the UK goes into the sandwich market. And when you have fewer office people working in London, for example, in your office towers, you have fewer people going out and grabbing these Pret a Manger shrimp sandwiches. Same thing in the U.S. The U.S. prices are hit by lack of seafood sales. The other issue with shrimp, which I want to mention before we leave it here, is Brexit. It's now posing a new risk of disruption. You know, Canadian shrimp industry breathed a sigh of relief once the Canadian-European trade deal came into force, because there's no tariffs on cold water shrimp. If the UK leaves without a deal, that's going to leave a void, and tariffs would snap back on Canadian shrimp going into the UK. Even if people can do something about it to mitigate that, the uncertainty of it is causing problems for importers into the UK right now. Businesses do not like this kind of uncertainty, and right now, 3 months before the end of the year, we still know, at least at the end of September, we don't know what's going to happen with Brexit. I want to talk, just to wrap up here, just in general about fresh fish markets have been hit more than frozen fish markets have. So Canadian halibut experiencing lower fresh fish demand. The main trend in a lot of other species is that lower volumes have been what has been helping maintain fish pricing. If we look at scallop prices have come up somewhat, but we're facing a much lower supply in the U.S. Since the beginning of the fishing year in April. You can see on the bottom, we've had very poor imports, of course, in May. June is about average, and the pace of landings in the U.S. has been much lower. So when we look at scallop prices, which is on this chart here, where we look at the low prices at the start of the fishing season, have now recovered. The driver for that is not that the market is healthy and there's all this demand out there. The driver for that is that the supply has really adjusted lower. And because of that, things are imbalanced. And when we look at the price graph, we're much more in a normal range. If we look at haddock, again, we see the same thing. We we don't have significant whole fish volume from Canada in the spring. If we look at fresh fish fillet volumes, they're down significantly. And because they're down so much, you can see the blue bars on these two charts show the volumes. And if you look at the chart on the right, you'll see the volume of fresh fillets is about half of that as what it was in prior years. And it's that low volume which is helping to push up the price there. Oyster pricing has not changed again. It's very similar, but the volume has collapsed. In other words, when we look at pricing of farmed oysters, it's very similar to prior years. It's the $4 to $4.50 level on the export pricing. But if we look at the volume, we're like half the volume in 2020, if that we were in 2019. So you can't look at just one side of the equation. What's happened here is that producers are maintaining their price by not shipping product, by leaving product in the water or finding other things to do, whether it's freezing or processing or what. Frozen redfish, again, lower volume and the pricing is holding up. Frozen fish has been less volatile than a lot of fresh fish. So now I want to talk about the holiday and Lent outlook. What's going to happen in December? What's going to happen next spring? On the favorable side, many species have seen a price recovery. So we're not looking at something where the price of our main species is the same as it was in the depths of the pandemic back in May. But a lot of this price recovery has not just been for demand, it's also been due to supply constraints. And so these supply cutbacks have been very important. Seafood consumption trends are looking very, very favorable. The trends in crab and lobster indicate a lot of strength for the holidays. The Chinese export market is also looking good. But on the unfavorable side, the U.S. is really in a period of extreme uncertainty because of the election and the unknown economic response. And the failure to control the virus, if we don't get our act together, could lead to very serious economic calamities over the winter. And so any increases in seafood supply potentially could put a lot of downward pressure on prices. And so to whatever extent we can use strategies that maintain pricing through maintaining reasonable amount of supply, whether by luck, by weather, or by plan, is going to help us to get through this. The LFA 34 lobster season is really key to this. That's when the biggest volume of lobster happens in Canada. It opens just at the end of November. And major price changes can occur when new supplies are available. The shortage of lobsters in Maine is supporting current prices, but if the LFA season is slow, LFA 34 season, if there's bad weather, if there's few fishing days, prices could really, really shoot higher. I think that there's enough pent-up worldwide demand for lobster that if the LFA landings were heavy, it would be healthy and we could certainly sell them. I think there's a lot of reason to be optimistic about lobster. Snow crab demand is a cultural phenomenon in the U.S. Snow crab consumption, the extreme popularity of crab, the easy availability at retail, it's made snow crab an iconic food in parts of the U.S. We've always talked about certain foods having cultural importance in Asia, and that drives their value. I think that that's happened to snow crab in the U.S., and unless there's a very serious economic collapse, there is no reason to think that snow crab is going to fall out of its current trading range at all next spring. Salmon offerings are giving the Canadians an opportunity because these air transport problems are not going to be resolved quickly. So there's a longer-term advantage for Canadian fresh salmon producers who are closest to the market. The food service weakness and the debt overhang is a potential risk, but the salmon volatility seems to be under control. I think the Canadian salmon sector is looking healthy again for the winter and spring. So let's go back to our original question. Was the pandemic a unique disruptive event for the seafood industry? Well, I have to say, the seafood industry has continuously existed within a framework of supply uncertainty and trade disruption. In 2014, our Russian markets were shut off to Canada overnight. We've always had a lot of disruption. We've had the China tariffs, for example. We've had China shutting down Canadian imports for political reasons. In March of this year, not knowing what to expect, it appeared possible the industry could not operate at all. But we overcame that and were able to operate quite well. So 6 months later, it seems like the disruptions are species specific, and some species have increased value, even an increased supply, as in the case of snowcrab, even in the face of the pandemic. So I don't think it's been a uniquely disruptive situation for us. Canada is going to continue to depend on the U.S. market. The current crisis in the U.S., I think, remains the biggest threat. A competent government, as we see in Germany, as we see mostly in Canada, they have the tools to address the health and the economic issues. The U.S. has totally failed. If authoritarian corruption takes hold in the U.S., if Trump wins this election, Canada will have a significant problem on its southern border, and it won't be able to rely on the U.S. as a stable trade and market partner. This problem obviously would be a lot bigger than just the seafood industry, but I think there's a very dark future for the U.S. in the next few years unless it gets reversed in this current election. So thank you. In our live session, we now have time for questions. I've always enjoyed this presentation to the Fishery Council of Canada. I want to thank Paul especially for inviting me again and keeping me in the loop. And I hope we have a lot to talk about. So thank you very much.
So I'll start with one that I was also thinking about too is, John, what do you see as the most promising markets for Canadian exports over the coming months, and what factors in those markets will have the biggest impact on demand for Canadian products? And I'm going to add an add-on to that is it as simple as thinking that markets with warmer weather as North America goes into winter and restaurants will have a harder time operating, those locales that have warm weather and open patios, are they going to be better markets for us?
Thank you, Paul. There's really two ways to think about that question, and one of the problems with dealing sort of macroeconomics is that you tend to focus just on the big Canadian species and where the money is and where most of the volume is. And I think that to answer the question about where opportunities lie, there's a lot of smaller species like turbot, like the arc shell that Clearwater produces, the clam, things that have very healthy specific niche markets, but they don't show up as much in the overall statistics. And I think an expansion of finding unique markets, whether it's in Korea or Singapore or India or Dubai, is one thing that individual exporters can do. In terms of the USA markets and the cold weather, warm weather thing, I personally think it's more an issue of where there's fear of the pandemic. And so when we see this drop in restaurant sales, what we're really seeing is a spike in cases in Arizona and Texas and Florida that happened in August and September. And that's retreating, but all of the experts tell us that we are facing a difficult winter. So I'm not anticipating any restaurant recovery, frankly, until we have a better treatment of the virus.
Okay, thank you, John. Another question. In your presentation, you talked about the debt levels in the U.S. distribution chain and how that's impacting some of the seafood companies. And I have seen that in the trade media over the last few weeks and month or so. But I haven't really heard about that in any other market, whether it be our domestic market here in Canada or in other export markets. Is the same thing happening elsewhere?
That is a good question. I think that let's take China, for example. I mean, the issue is China has had an extremely aggressive economic response to COVID. And because of that aggressive economic response, we're seeing growth in their industrial spending. It's going to be followed by growth in consumer spending. And that's certainly going to impact demand for Canadian products like lobster and shrimp. The problem in the U.S. has been the failure of the economic stimulus and to be continued. In other words, it started out great, and then now it's run out of gas. And that's where the crucial thing is what happens. What happens next? When I look at Europe, I think it's a mixed bag. I mean, talk to people who are exporting into the UK. It's up one day and down the next, and then pubs are closed in Manchester, and people revolt, and they're reopened. It's just extreme volatility, and unless there's a consistent kind of government approach to help deal with some of these debt and economic factors, I think it's going to exist elsewhere, even though it hasn't been publicized.
Okay, thanks, John. Next one is with regards to Canada and China, and how do you see the political tensions between the two countries influencing the seafood trade?
That's an important question, and there's no easy answer. I mean, we have to go by what our experience has been. And on the West Coast, we've certainly seen disruptions on things like gooey duck, for example. And we've seen disruptions potentially from the finding of virus presence on frozen fish packaging. This gives the Chinese the opportunity to sort of use their science for political pressure. And if relations between Canada and China deteriorate, there's simply no question in my mind that China might take some of those steps. But in my view, Canada is in a much better position. A country that was really hurt by that badly was Ecuador, because Ecuador became totally dependent on China for their shrimp exports. And when the Chinese said that there are 3 or 4 companies that they're blacklisting because of health concerns, it immediately had a huge negative impact on the Ecuador market. I don't think Canada is quite as vulnerable, first of all, because there's more products that are sold. You have a higher proportion. China could do that with shrimp because they had a lot of other shrimp to buy. China can't do that with lobster because they don't have those other alternatives. And they don't want to do something that's going to disrupt a popular market item and lead to a lot of antagonism. So that's my answer, I guess.
Okay, thank you, John. Here's another question from one of our participants. Do you expect the growth in U.S. retail demand for species such as snow crab and lobster to be sustained post-pandemic? So will consumers remain interested in this home eating experience once the restaurant demand rebounds?
I think it will. I think that the pandemic is leading to permanent changes in kind of food distribution, not just seafood. But I think it's going to lead to more preparation of takeout meals that can just be picked up on a table outside, a kind of enhanced grab and go. I think it's going to lead to people who haven't done home cooking to find that they can do it and continue to do so. So I think that the big question in the retail sector, of course, is this going to continue? But I think the signs are that it will, especially as the retail sector expands its sales opportunities. For example, one of the retailers, I think it was Albertsons, just today or yesterday announced that they were going into a whole pickup locker situation where instead of wheeling your cart through the grocery store, you could put in your online order, drive to the grocery store, go to your locker, pick up your bags and leave. And that kind of convenience is very, very attractive. And it'll lead, I think, to increased sales on the margins.
Okay, thank you. Another question is getting back to Brexit, because you did mention that. And how do you see that impacting Canada's exports, as you said, leading up to January 1st, but even beyond, even if the governments are able to reach a transitional arrangement to avoid the resumption of tariffs?
It's very hard to sort of think what's going to happen with Brexit. I mean, my question would be, can the Canadians buy a lot of mackerel? Because if the UK is cut out of the European markets for whatever reason, there's going to be huge disruptions. And it's not just, and then they're going to be looking for opportunities to sell their products, and they might be very quickly, as you said, open to special deals with Canadians. I just think I'm not a fan of Boris Johnson, and I think it's highly unpredictable.
Okay, well, we'll stay with another highly unpredictable political situation in your home country, and may have to limit your response to this because we could probably go on for quite some time. But is there anything else you wanted to say about the outcome of the presidential election and its impact on our Canadian sector?
I'll just be really brief. I mean, most people in the U.S. think there's a true, genuine crisis in the country, and that the only way to resolve it is an overwhelming electorate decision in favor of the Democrats. And that seems to be what is developing from polls. If that happens, there's the way open for the U.S. to regain a lot of the economic prowess and normalcy that we depend on. If not, it's going to be very hard to foresee what happens.
Right. Okay. And this one is, I think, I'll point you more on the supply side perhaps than the demand side. But as the US and Canada, and particularly Canada, as we're moving towards increased lockdowns, particularly in Ontario, although we're not a producing jurisdiction, but if it happens along our coastal areas, how do you see this impacting the industry?
Well, I think that one of the great credits of the Canadian industry was how people got able to operate this spring. I mean, remember, there was a lot of question as to whether seafood processing plants could even successfully operate, whether fishing crews could go out on vessels. And that was done in a really excellent way. I mean, we really proved that we could live with the health requirements necessary to produce seafood safely. And I don't see any indication that that's changing. It's added a tremendous cost at the processing level. It's also reduced, I think, the overall supplies, but it hasn't led to halting production. And I think that people are getting used to some of this extra expense. And so I don't see there being a supply issue from shortage. I see the supply issue being if everybody jumps back on board and produces too much.
Right. Okay. One thing that touched on a little bit throughout your presentation when you were looking at individual species, but more generically, do you see any difference in the impacts of the pandemic and the various disruptions associated with it during the year? Are they different between the wild side and the farm side of the sector?
That's a good question. I don't have in my view, they're not. I mean, I feel that both sectors are influenced by their supply issues. And so you see, for example, a big impact in farmed oysters because a lot of the buyers have disappeared. So I'm not quite sure what producers are able to do with the excess oysters. But on the salmon side, for example, farm salmon is following its traditional seasonal patterns. I don't think there's a difference in impact between wild and farmed species.
Okay, good, thank you. We're going to shift gears a little bit and ask you something less directly associated with the pandemic. Do you see the rise of eco-conscious consumption and veganism impacting Canada's fish and seafood market?
Not the rise of eco-conscious consumption in the sense of people wanting to get sustainable seafood. That part, I think, Canada is largely meeting that need. I think the issue, which was also discussed in the U.S. in the spring, is the growth of alternative meats and seafood, and the idea of producing a fake shrimp or a fake crab, which is not a surimi-based product, but an actual soy product that has been engineered like Impossible Beef to actually give a seafood type experience. And there's just a number of companies who are actively working in that area, and there's some fear on the part of the industry that it's not veganism, but the attraction of non-seafood based products that substitute for fish that might have a market impact. But again, I still feel this is something that's for the future. It's not for the next year or two.
Right. Okay. Getting back to the export side of things, you talked a little bit about the different markets and where we're at and how they're recovering and whatnot. And some people think we need to diversify even more so. Do you have any thoughts on which species or markets might offer the best short-term prospects?
Well, I firmly believe in diversification from the Canadian seafood perspective. I think that's vital. I've always felt that there was a potential opportunity for snow crab in Europe, because anyone who's traveled in Europe and eaten the crab that was there before the Norwegian snow crab industry started, it was far inferior to snow crab. And the fact that the Norwegians are selling maybe a third of their Barents Sea snow crab into the European market, to me, is something that gives the Canadian export industry a real opportunity. The problem is it's very hard to shift gears when your customers are already, when your existing customers are buying everything you can produce. Outside of snow crab, I think these kind of niche markets, whether it's in a flatfish or a farmed halibut or a turbot or Dungeness crab or something, I think that diversifying the number of customers of those items across countries is very, very important. And there is no easy answer, unfortunately.
Right. Okay. Here's another question from participant. Why is Russian crab not impacted by trade embargoes relative to the Ukraine invasion when Russia has prohibited seafood imports from the U.S.?
There was a decision, I think, on the U.S. part not to be reciprocal about that. Remember, the U.S. has a lot of other sanctions on Russia, including financial sanctions. But I think there was a deliberate effort not to put a food export embargo on any of the U.S. food items, whether it's agriculture or seafood or any of those.
Right. Okay. I've got a couple questions on lobster. The first one is getting back to one of the earlier questions around will the retail growth survive the pandemic and continue afterwards? Would you say that's a success? I think the data you indicated that there was an 8% decline in volume but higher pricing. So is that a change in the product format mix or what?
That was for 2019 data. The decline in volume was 2019 on lobster at retail, and so we don't really know. We know that overall lobster volumes are down in 2020, but retail has taken a larger share. And I suspect that the total pound for pound comparison between 2019 and 2020 is going to be up at retail. So I do think that the lobster industry is facing an issue where there may be this is why China is so important, because in terms of the U.S. market, there's probably a ceiling on live lobster. Because there's just a ceiling on how many people can prepare it themselves and how many restaurants will carry that type of an item. Where there is no ceiling is on frozen lobster. And so I think that what we saw back in 2013 with very low frozen lobster prices, we saw a big expansion in the number of restaurants and retailers too who are carrying frozen lobster meat and frozen tails. And I think that's where the long term is the potential for expansion. And let China have the live lobster and sell more frozen lobster in the U.S.
Okay, and sticking with lobster, with the unfortunate news in Southwest Nova, it's starting to get more media coverage, even nationally. Do you think that might affect the reputation of the lobster sector and impact consumption?
Well, as an American, that's an allocation issue within Canada. And I don't really think that the people who are consuming lobster and crab are paying attention to that. It's not up at the top of mind the way that protests against seals and things like that might be. I don't think it has a market impact because I don't think people are inclined to take sides.
Right. Okay. And one last question, a nice little wrap up from one of our participants. As you mentioned, you taped the presentation about a week ago. Is there anything that has happened since that you'd like to mention that perhaps you haven't talked about in any of the Q&A?
Thank you, Paul. Yes, one definite thing we need to correct is on Alaska snow crab. When we first did this presentation, the thought was that the Alaskans managers are going to be conservative and leave their snow crab quota as it was last year. But in fact, they decided to make an economic decision to allow as much crab to be produced as possible to compensate for some of the losses that the industry has had elsewhere. And their 2019 survey did have a ability to let them do that. So they've increased their quota about 25%, and that's going to impact the crab market as well.
All right. Well, thank you so much, John, for your presentation and for the Q&A here. For everyone else, thank you for participating. As I said, we will share the slide deck with all the participants, and hope that you've been watching the rest of our webinar series. I encourage you to visit the TheFutureEconomy.ca website, as well as our website, for information on that. Encourage you to watch the presentations and segments if you haven't already. We've got a few more coming up next week. We have a biodiversity panel, so anyone interested in learning more about sustainable fisheries management and how it impacts the need for us to protect and conserve our biodiversity, that one will be of keen interest. And we have our last segment, which is Kerry Bunnell, our incoming or our new chair of the board. He has a VIP interview, so you can listen to his perspective on the sector over the next coming few years. So again, thank you very much to our sponsor for this session, Connor Brothers Cloverleaf, and thank you to our other sponsors for the series. And I wish everyone a good rest of your day. Thank you.